Well, many of the big retailers are being left out of government help and struggling to pay their bills right now. Courtney Reagan is here with a look at who isn't getting government assistance and why. Courtney?
Hi there, Kelly. So many big, well-known household retail names that have thousands of employees, hundreds or even thousands of stores, vendor contracts, rental agreements. They're not eligible for either the Fed's credit facilities or the CARES Act through the Treasury because their debt isn't investment grade as of March 22nd. You've got Macy's, Gap Inc., L Brands, Foot Locker, Bed Bath & Beyond, Abercrombie & Fitch, and others that currently have debt that is junk rated, even though those retailers' balance sheets are at least stronger than names like JCPenney, Neiman Marcus, J. Crew, J. Jill, GameStop, and others that also have junk rated debt but on a much lower on the speculative rating scale. Now, the National Retail Federation is communicating with both President Trump and Treasury Secretary Steven Mnuchin asking for liquidity for all, noting that retailers that were solvent before the crisis could be pushed to insolvency through no fault of their own, but as a result of this virus. The NRF says, look, officials are responsive, they're accessible, they're listening, at least, to an array of perspectives. One concern, of course, is that if junk bond-rated companies do get access to this aid, that would mean that a company like Macy's would be eligible along with a company like JCPenney, and JCPenney was struggling. It was sort of right there on the brink before this crisis hit. So that opens up a little bit of controversy over which companies should be saved. Kelly?
Courtney, I think this gets right to the heart of the whole rescue. I mean, it's either you could say, look, we're not picking winners and losers. There's money for everybody. This was nobody's fault. And that would be one approach. Or you could say, oh, we're not going to try to help the weakest of the weak because, it's their own problem. And I understand the government doesn't want blowback for helping people like JCPenney who are probably going away anyhow. But once they start picking winners and losers, that also to me seems like it'd be hugely problematic.
Exactly. It's such a sticky situation, Kelly. And if you look at companies like Macy's, their debt was downgraded about a month ago. So before this outbreak really took on steam, and they were given that junk status rating, albeit higher on that scale, but they've got more than 100,000 employees. They've got hundreds of locations. They've got rental agreements. They've got vendor contracts. So if something happens and Macy's gets pushed into a dire circumstance, the ripple effect throughout retail could be pretty immense. But I understand that's a department store in a different balance sheet standing than a JCPenney. So again, right to your point of picking up winner or a loser or just giving liquidity to all. This is a tough one.
What about, Courtney, in terms of private sector solutions here? It's interesting that you look at distressed debt investors and they are starting to get out there and try to raise big funds. Could there be a role to play by private equity or by retail itself through consolidation, something that doesn't just rely on the binary relief or no relief from the government?
I think that's a great point. I do think that events like this, albeit out of sort of business control, at least opens up opportunities for some investment from private industry, consolidation, M&A. We know that there are companies out there that sort of look at strong brands, but within what you would call a broken company, if it's sort of broken operationally, but the brand itself is strong, and there could be some opportunities to buy the intellectual property. So I do think we're going to ultimately see that happen. I think the concern is just it happening so much to so many all at once, and then the ripple effects there, or even missed opportunities to have those purchases, those acquisitions, those mergers, because frankly, it's just so messy and it's happening so quickly.